Eric Muadh, Muadh.com, for the weekend of July 11th and July 12th, 2015. Let's take a look at how Asian markets closed for the weekend. We can see pretty much a mixed bag. Some of the markets were slightly unchanged. The biggest move, of course, was China, up about 4.5% in a very volatile week. Take a look at how Europeans market closed for the week. We can see a nice closing Friday action, with the biggest mover being the French market up 3%, German market was also close to 3%, and the FTSE was up 1.3%. Right now we are looking at the Americas trading slightly higher, as the US markets are also having a nice day. We see that the Brazilian market is up about 1.71%. For the day, with about 3 hours to go in the US, we are looking at the markets up about 1% across the board on the major averages in terms of the Dow, Nasdaq, and S&P 500. Let's take a look by taking a look at the Canadian market, the TSX, which, as you can see, had a down week about 2%, but we are coming back to test this obvious trend line on the weekly. And if that trend line can hold, then we can expect at least a couple weeks of a bounce. So that is a make or break area. Anything holding and starting to push high in the coming week would show support. The one problem I do see here is the crossover between the 13-week moving average and the 34-week moving average, and this is bearish. So as long as we have this crossover, you have to really look at most of any bounce here to be a little bit suspect. The last time we had a bullish crossover was here. We had a slight multi-month rally, and also we had another bullish crossover here at the tail end of 2013 for a nice multi-month rally. So depending on how things are going to develop here, looks like we are settling at the week exactly on the primary trend line there, or on the trend line. If it can hold, that's good. If it fails, that's not good. Also, we see that the weekly RSI is coming back to test this line of support where it has been bouncing over the last couple of years. On the weekly RSI, it's been finding support in this level, moving below it and above it with uniform activity for a continuation of the move. And even here was a nice bounce. So depending on what happens here, if we can reclaim the area back above that green line, then the market here should be setting up to bounce week to week. Of course, that is the thinking, but if the market cannot move back above the green line and continues pushing its RSI below that green line, one can expect lower prices. The one thing I wanted to sensitize traders here is that the possibility that the Canadian market, now with its monthly RSI trading at 51.64, that is very close to 50, so holding currently at 51.64 approximately. Anything below 50 on the monthly RSI would suggest a net big down month, just like we had this huge down month here in 2008 during this big candle down. We had another big push lower on a month-to-month basis during this period here. So depending on whether we can stay above 50, of course, if you're a bull, you like the market to hold above 50 on the monthly RSI. Anything below 50 would suggest a big down month. So let's watch that number. Above 50 is good, below 50 would suggest that the market would deteriorate into the close of the month, more than likely. If we take a look at the Brazilian market, which is having a good gain for the day, coming back to test the RSI lows line. Whoops, let me draw that again. So it's coming back to test the RSI lows line, which seems to be holding right there. Today it's having a slight bounce, so that's holding. And as long as the daily is holding on this obvious support line on the daily RSI, then maybe the market here is stemming the recent slide. Also happens to be trading around a downward declining 200-day moving average. So maybe the 200-day moving average is gonna be some type of resistance now that we are trading around it. And the fact that the 200-day moving average is pointing down, we got the 50-day moving average pointing down, could suggest, even though the daily is holding, that eventually maybe it rolls over and heads down. But for now, we can go with the fact that the daily is holding, so we have to assume day to day the market wants to hold and bounce in terms of the price action. Now, this type of daily support can be seen on many markets. For example, take a look at the FTSE, the London Financial Times Index, and we see that if you connect the lows line and draw a simple line connecting the lows on the daily RSI, so connecting all these points, you see that over the last 2-3 days it's come here, over the last week actually, and formed a nice double bottom. In fact, let's take a look at a fresh chart for the FTSE so we can draw that line correctly. So go back to the daily, connecting the lows. You see that this is an obvious double bottom, which might explain the nice 2-day swing after it found support. And also you can see that this line, if you draw a line right there, let's make that in green, you can see that ever since it made these two lows, this low and this low, it has been bouncing on that green line. Every time with uniform activity, the market bounces for a couple of days. Even here, double bottom, which was this lows here, for a couple of days rally, and now we are also holding above that green line with a double bottom support. Also, there's an argument that can be made that the markets recently made lower lows in European markets, while the technicals had a slight improvement. Now, that's the bullish argument. Day to day, I think there's a reason to suspect that this could also be where they stall. The reason why I say that is if you take a look at the break, so this break point right there, beginning of June, corresponds with this movement which has led to prices going lower. If you draw a simple line like that, you can see that we've seen resistance around there, which also happens to be around the 50 daily RSI level. So that has become resistance once before, which is during this period, and the market did drop to new multi-month lows, and we ended the week exactly with a Friday action coming back to test this line. So day to day, maybe we've seen a bounce, but now the next action could be for these markets to actually pull back. And one of the reasons why I say that is because if you take a look at the hourly and draw a line connecting recent RSI highs on the hourly, you can see that this is where the FTSE and by and large the European markets have been stalling hour to hour. Intraday highs have been coming at this point. So what I'm saying here is, depending on how the market behaves around here, we are either going to see a breakout by trading above this area and we see the prices accelerate higher, or we might actually be confirming resistance again, where we might see RSI showing resistance on that red line, indicating that hour to hour, day to day, that the next move is going to be lower. So we'll see which way the market decides to go. If we take a look at the weekly for the FTSE, you can see that it is holding around where it needs to hold support. If you draw a line like that, you'll see that it has been bouncing nicely on the weekly time frame with uniform activity below the line, back above it. Each time there is a multi-week, multi-month rally, and also we see that we are coiling back above that green line, suggesting week to week maybe the market could move higher. The only problem I see here again is the bearish crossover between the 13-week moving average and the 34-week moving average. So this is not a good sign in the coming weeks and months, that this could also easily deteriorate to prices going down. Take a look at the monthly, and in the monthly there is some little bit of reason to think that this could be a good month. In fact, let's take a look at a long-term monthly view, and we can see that since 2008, 2009 actually, this market has been bouncing off the 50 level and moving higher. So bouncing off the 50 here, early 2010, those were multi-month lows, and again here bounced on back above the 50 for a nice re-entry. Recently in early 2012 bounced back above the 50, which was this period here, and now it looks like we are back above 50 this month. So as long as the monthly is holding above 50 on the monthly time frame, European markets should be setting up to move higher over time. If we take a look at the French market, we can see here we bounced on the 50-day moving average, which is good short term. We also held this line that we've been drawing on the daily, and you can see this bounce has come with uniform activity below the green line back above it, which shows that this is a logical place to go long, or at least to expect a bounce. And this line is where the market began this movement off recent highs, off recent lows, excuse me. So once we moved above that RSI range, which was off the lows here, market's been trading higher since then. We bounced below the green line and back above it with uniform activity, which was that re-entry. We also kissed that line and bounced during the early part of 2015. So we've been using this for short-term re-entry in the market, and day to day that line also held, which is actually a good indication day to day for where the French market wants to go. Take a look at the German market, the DAX, and you can also see that on the daily it held on this line here. This line comes off the lows here. This entry gave us this move off the lows, and the market went on to record higher highs. So we can use this line, which is the green line, for support area, which has been very successful over the last year or so. And now we see that it is coming here and showing uniform activity bounce on the line. That's good. Also short term holding above the 200-day moving average, which is also short term good. If we take a look at the weekly for the German market, we can see that all it needs to do is hold back above the 50 in the coming week or so. If it can bounce back above 50, that would suggest that it is due for a bounce. The last time it held around the 50 level and bounced off the 50 line on the weekly RSI was during this period, and of course we know that markets went on a great run after that weekly support. If we take a look at the Russian market, we can also see that it has come back to a line of support on the green line right there, and this green line began during this push on the RSI, which is off the lows here. Market has been higher since then, and we can see it held with support right there, which was during these lows. It held double bottom support here, which was short-term daily lows, and over the last week or so it has held there also in what looks like to be a double bottom support. So one can assume that because the daily is holding, more than likely over time this market is probably gonna move higher unless it comes back and breaks that line of support. So if it breaks this green line, then that's when you can really look for these markets to go down. But until it breaks that line, one can assume that support is what we need to act on, which means generally speaking one needs to be looking for reasons to re-enter the market after that recent pullback. If we take a look at the Chinese market, which had a crazy week, take a look at the daily for the Chinese market, which was down about 34% off the highs in about a couple weeks. Now that's a major drop, but take a look at where it's bouncing off the 200-day moving average, which is, generally okay. Is it gonna go back to new highs? Probably not anytime soon. The best you can assume here is sideways action to increased volatility. If we take a look at the weekly, we can see that, remember we were talking about once it moves back below 69.1 on the weekly RSI, that's when you can expect a pullback. It finally did move below 69.1, which was during this period here at about 5,000, and since then it's been much lower. Now, a couple of things here to observe is, number one, we are looking at the market coming back here to this line connecting recent RSI lows on the weekly. So you draw a straight line connecting RSI lows on the weekly. It's exactly where it seems to be holding support week to week. Also keep in mind that ever since this move began with the RSI moving above 50 here, RSI jumped above 50, took the market from about, let's call it about 2100 straight, almost straight to about 5200. So 2100 all the way to 52 in a couple of months once it moved above this RSI 50 level. So we are coming back in essence to test the 50. If it reclaims back above 50 in the coming week or so, then expect it to start building, or at least to show some strength and to end this recent drop. So it really depends on what happens here. If it can hold above 50, that's good. If it can hold above this RSI lows line, that's good. And obviously, if that doesn't take place and we crack below the line of support and also below 50, then that's when we would expect it to start continuing with its most recent slide. If you take a look at the monthly, I've been talking about it's only when it moves back below 69.1 like it did this month that is when we would see a correction. And so now we are seeing it trading below 69.1. As long as it is not back above 69.1 on the monthly, that would indicate that we have to be open for any possibility. Just like the last time, and I'm not saying it's going to do that this time, who knows what it's going to do, but we cracked below 69.9 here late 2007, and since then the market hasn't been back to that level. So this is the key. In other words, you can call this a broken market because it is trading below 69.1 on its monthly RSI. So one has to be very careful. Here is a market that more than likely could trickle down or be sideways, but definitely looks like this nice uptrend has definitely come to an end. If you take a look at the KOSPI, couple of observations. This is the line where it had broken out, and strangely enough, so after breaking out on that line there, it had a nice run, and since that breakout it has come to this line twice and held. It held here once and bounced. It's coming here, seems to be holding. One has to assume that it wants to bounce on that line after breaking out. Also, it has been touching the 200-day moving average and bouncing. Also on the daily RSI, it is above this line here of support. Given all that information, it looks like ever since this bottom here, so off the lows here and here, market's been coming back and with uniform activity and bouncing. It bounced back above that green line with uniform activity. It was a nice re-entry, and we are seeing it hold exactly on the line, suggesting that day to day, even the South Korean market looks like it wants to bounce after a recent sharp slide. Take a look at the Japanese market. On the daily, you can see that it is off the highs right there. But take a look at where it's finding support on the daily RSI. Support is coming exactly where it should be finding support based on where it has been bouncing recently. So off the lows here, late 2014, which was this RSI move, the Japanese market's been coming back to this level and showing support. And if you've been using this for re-entry, generally speaking, this is where markets have bounced to new highs. And so we see it holding there. So one can assume that this market also wants to bounce. Now, of course, we have to be careful, because if it cracks below the line, which is cracks below this green line, that would not be a good sign. But we haven't seen that happen, so we have to assume it wants to move higher. Same type action can also be seen in the Australian market. Take a look at where it has been bouncing off the lows here. This is where the RSI began the move. Right there. RSI since then, if you draw a straight line, this is where it has been bouncing. So it's been bouncing, as you can see, on the same line for a couple of days, move higher, and recently it bounced above that. So we are stuck between two obvious lines. There is resistance every time it comes to the top side here. It's been smacked down, as you can see, resistance recently here, which is off the recent high there. So, and then we have support on the downside. So very confusing phase in the market. We are obviously stuck within those 2 points. We move higher, we get smacked down. We move lower, we get support. So market stuck in this range. The problem here is we are trading below the 200-day moving average, and we are also trading below a sharply declining 50-day moving average. So net, to me, this is a market that is generally not very healthy. maybe sideways to down, even though we are seeing daily support. And the reason why I say that is obviously because we got the moving averages pointing down, which is not a good sign, and we got resistance. We are trading below the 200-day moving average. So generally speaking, that's not good. Markets tend to move higher when they are trading above those obvious trend lines. For example, during this phase here, the market moved higher because it was trading above the 200-day moving average and was also trading above the 50-day moving average. Right now we have the opposite, indicating that if you are to make a mistake here, you'd rather be short than long. Let's take a look at the Nifty, and as you can see, the Nifty did end the week slightly above RSI 50. That could be a slight problem, because if we crack below 50 in the coming week, that would suggest a big down week. So we just be aware of where the RSI is trading. Above 50, that's good. Below 50 would suggest a big down week. The reason why I say that is if you take a look at the most recent moves below the 50 level, markets been having at least one or two down weeks. And also here we moved below 50, we had one or two down weeks. So holding above 50 is good. Otherwise, if it cracks below 50, expect a big down week. On a day-to-day basis, market did come and show resistance on a level where it has been stalling. So right there you can see that market's been stalling on this RSI level off the highs there, showed resistance again here during this period, and over the last couple of days we came and went above this line with uniform activity and back below it, which was a sell signal. So the market looks like it is, to me, sideways. Also makes sense why it's sideways, because it is trading at a level where you have both the 50-day moving average and the 200-day moving average, which means a lot of indecision. On hour-to-hour basis, market looks okay, because if you take a line that connects the recent RSI lows, it looks like that, which is healthy, or like that. At least we see that it is holding where it needs to hold. So hour-to-hour, Indian market looks okay. Whether it's going to bounce or not is going to really depend on how it responds to the weekly RSI. Below 50, expect a big down week. Above 50, then the market has a chance of moving higher. Let's take a look at one more market, which is the South African market. And you can see here, if it cracks below the recent monthly closing low, and the level to watch there, if it cracks, is 1691.34. Anything below that would suggest a market that is probably going to start a huge drop. Above that, maybe it holds. The reason why I say that is you're looking at the 36-month monthly RSI looking like it wants to crack, and this would be pushing it to fresh 3-year lows, which is not good. So this RSI looks like if it drops below that, that's not good. But the level to watch there is the recent monthly closing low of 1691. Anything below that would suggest that that's a market that is due to have a plunge. Also, you can look at the MACDs, and I discussed this a couple of weeks ago, that the MACDs here could easily be moving to fresh 3-year lows. If the MACDs and the RSI move to fresh 3-year lows, then the South African market is due for a major correction. Take a look at the weekly RSI, and depending on how it trades around the 50, it is either going to be bouncing on the 50 level for a nice recovery, something it has been doing for many years, bouncing on the 50, going below 50 and back above it with uniform activity. Even here, uniform activity below 50, back above it, which is that level. And also here, it looks like it went below 50, back above it with uniform activity, which was that re-entry. So generally speaking, if it holds the 50 RSI level, it has a chance of bouncing. Otherwise, if it starts trading below 50, then more than likely this market also sees lower prices. Now I want to show you one market, which is the S&P 500, the US market. And as I always joke, it's also part of world markets, and you can see that S&P 500, if it can hold above the 50 level on the weekly RSI and bounce back above 50, that would be bullish. We can see that on the daily, that's the hourly, but on the daily, S&P 500 has come back to a line where it has been bouncing nicely. And so the daily, just like other world markets, as far as the S&P 500 is concerned, seems to be indicating that this is where it could start recovering. As you can see, most of this huge, like this low here, was uniform activity below that line, back above it another support level there with uniform activity, which was that entry, and on and on. And here we see double bottom support. We can also argue that the market made improving highs on the RSI, while prices made a slight low. We are also holding at the 200-day moving average, which is also good. So day to day, week to week, this market and world markets could actually be showing that they want to move higher, and we'll see how things settle out. Otherwise, down the road, if the market does not hold this line, for example, we have to be vigilant, because if we come back down the road and break that line, that's going to be when we turn bearish. For now, it looks like the market is holding where it needs to hold, and that does actually match up with other areas across the globe. So we'll see how we go. Eric Mwathe, Mwathe.com. Good luck, peace, and blessings. Woo!